Topic 5 of the CAIA Level 1 curriculum examines private debt as a rapidly growing segment of alternative investments that provides financing outside traditional public bond markets and bank lending channels. The curriculum introduces private credit strategies such as direct lending, mezzanine debt, venture debt, distressed debt, and structured credit products. Candidates learn that private debt investments often provide higher yields in exchange for illiquidity, complexity, and elevated credit risk. The topic emphasizes how private debt can diversify institutional portfolios while generating contractual income streams. It also explains the evolution of private credit markets, including the expanding role of non-bank lenders and the increasing importance of private capital in corporate financing. A major focus of the curriculum is credit risk analysis and the bankruptcy process. Candidates study credit spreads, default risk, recovery rates, covenants, and capital structure priorities. The curriculum explains how covenants protect lenders by limiting borrower behavior and reducing potential losses during financial distress. Candidates also examine distressed debt investing, including reorganizations, fulcrum securities, debtor-in-possession financing, and bankruptcy procedures under Chapter 7 and Chapter 11. These concepts help investors understand how creditors may recover value during restructurings and how distressed debt managers seek opportunities in financially troubled companies. The curriculum highlights the importance of legal protections, restructuring negotiations, and risk-adjusted pricing in private debt investing. The curriculum also explores leveraged loans and direct lending as key private credit strategies. Candidates learn the differences between bonds and leveraged loans, including liquidity, covenant structures, and collateral protections. Direct lending is presented as a financing approach where private lenders provide customized loans directly to middle-market borrowers without traditional bank intermediation. The curriculum explains how private lenders evaluate borrower cash flows, collateral quality, leverage ratios, and covenant protections when underwriting loans. Candidates also study the rapid growth of leveraged loan markets and the increasing demand for floating-rate debt instruments in changing interest rate environments. These investments are often attractive because of their income potential and seniority within capital structures. Mezzanine debt and venture debt represent more specialized forms of private credit examined in Topic 5. Candidates study how mezzanine financing combines debt-like income characteristics with equity participation features such as warrants and profit-sharing arrangements. The curriculum explains concepts including payment-in-kind interest, subordinated debt, bridge financing, and project finance structures. Venture debt is analyzed as a financing tool for startup firms seeking additional capital beyond venture equity investments. Candidates learn the risks and rewards associated with subordinated lending, including higher default risk balanced by enhanced return potential. These strategies are positioned between senior debt and equity, providing flexible financing solutions for growing companies and leveraged transactions. Another important section of Topic 5 covers asset-based lending, securitization, and structured credit products. Candidates examine asset-based loans supported by receivables, inventory, equipment, or other collateral, along with the covenants and borrowing-based calculations used to protect lenders. The curriculum also introduces collateralized mortgage obligations, collateralized debt obligations, tranching structures, and credit derivatives such as credit default swaps and credit-linked notes. Candidates learn how structured products redistribute risk and cash flows among investors with different risk tolerances. The curriculum emphasizes both the economic benefits and systemic risks of securitization, especially in relation to leverage, liquidity, and counterparty exposure during periods of financial stress. Overall, Topic 5 provides a comprehensive framework for understanding private debt markets, credit analysis, structured finance, and the role of private lenders in the modern financial system. The curriculum combines legal, financial, and quantitative concepts to help candidates evaluate risk, return, collateral quality, and borrower creditworthiness across multiple private debt strategies. Emphasis is placed on illiquidity, covenant protections, restructuring processes, and the interaction between credit markets and economic cycles. By mastering these concepts, candidates develop the analytical skills necessary to assess private credit opportunities and understand the growing importance of private debt within institutional alternative investment portfolios.